All right, guys. I hope you all doing well today. So I'm quickly gonna go through another video based off the video that I posted, the last video that was posted on the channel, that was put in the Discord yesterday. I'm just gonna go through another video from that video. So remember yesterday, the video that I posted spoke about indication, right? And we looked at the gold and what the market was doing, and I told you guys about waiting for this swing high to be broken, right? Because this was the candle that was moving yesterday. It was moving yesterday, and I said, okay, once this candle closes above the swing high, then I'm looking to buy gold, right? Obviously, it will not just be me buying, but it gives me an indication of where the market wants to go. Okay, so pay attention to this because that's what makes trading really interesting. Because you don't come into the market with a like you don't already determine, okay, today I'm going to buy or today I'm going to sell, without necessarily looking at the market structure and understanding what you want to do or what the market wants to do. The market has not got any respect for anybody. It does what it wants to do. So you have to make sure that anytime you get in the market and then you do your markups, you do your technical analysis, you're looking at what the market structure is saying and then you're going according to that. So I told you that the market is always made up of buyers and sellers, right? And the sellers are always at a resistance level. It means that it's trying to go up, it pushes it down. Buyers are always at the support level. It tries to go down, it pushes the market up. This is the swing high that I was looking at. This is the main swing high that obviously once I know this is broken, they were looking for an indication, obviously, to buy as well. But this was the swing high that I spoke about yesterday. I said when this swing high is broken, I'm looking to buy from, I think what I did yesterday was I'm looking to buy from here. I put my stop loss on the previous low, and obviously I'll target the previous high, which is going to give me maybe a 1 to 2 risk to reward. But guess what happened? Even though it broke above that swing high, the market still sold. Yeah, the market still sold. So it gave us an indication of where it wants to go. And then when that indication happened, there was no continuation because it's made up of indication, corrections and continuation. But it didn't continue. It didn't correct the way we wanted it to correct. Obviously, the correction happened, but it didn't continue the way we wanted it to continue. So lows started being broken, right? So let's go to 1 hour. Let me show you something. Sorry about that. So this was a high, and this new high broke that high, right? So this high was broken. On the 1 hour, that high was broken. And then because that high was broken, the low, it created a new high over here, which is a new higher high. So the low that caused this high was this low, right? So this is the low at this point. That is a low. And then that is where the high was, that's the previous high that was broken. So what I came into the market today, what I did was I looked at what the 1 hour was doing, and I realized that, okay, it wasn't able to continue the way I wanted it to continue, even though it has broken that swing high from the 4 hour. This is the swing high from the 4 hour. If you go back to the 4 hour, you're going to know that that's the swing high from the 4 hour, right? That 4 hour swing high has been broken also on the 1 hour. So I was looking for a correction. So I was looking for the market to do this from here, come all the way here, and then go to the next high, like I did yesterday, like I was talking about yesterday. But that's not what happened. What happened was that the low was also broken. So the continuation didn't just end up and continue in our favor. What happened was that that low that caused the high was broken. And remember what I said, anytime a high or a low or swing high or swing low is broken, it's an indication of where the market wants to go. So when I saw this candle formed, I checked the 4 hour as well, and I realized that, okay, I'm seeing this candle really forming and it's breaking this low. So what I decided to do was to go back to the 1 hour and allow this candle to complete the formation. So once that candle was completed, I went to my 15 minutes, and then I was looking at. So let me mark up this one so you can see. So I marked up this new low that was broken. Then I went to my 15 minutes and I was looking for sales at this point. So remember what I said, it gives you an indication of where the market wants to go. So it indicated to me that the market still wants to sell because I've already got my indication from here. It indicated, it corrected, and it continued. And that continuation is what gave us this new low. And what happened again? It indicated, it corrected, right? So in the correction, it gave us a new correction here, right? It gave us a new indication here. So when I saw this new indication, all I was looking for was for the correction to come back to this level without breaking this high. So it came back into that level, and then once it came back into that level, I entered the sell because I knew that the market wanted to sell. So I sold from here. My stop loss was somewhere there, and I targeted. I went to the 1 hour, and then I targeted the next low, which was this level, right? So that was what I did yesterday. I mean today. I didn't get the buys that I was looking for yesterday. So what I did was that I went back into the market to see what the market was doing, and I entered that trade. So I think I took that trade on this at this place. So I entered that over here, and then I ended over there. So made some money today. I'm doing this. The essence of me recording and obviously showing you guys this whole thing is to let you know that you don't come into the market and say that because I want buys, I'm only going to buy. No, you look into the market, you look at the market structure, you see whatever is happening. And then once you see what's happening, you have an opportunity to position yourself, and show that every time frame is doing the same thing, then you can enter. That's what it's all about. At some point, we're going to talk about all the different time frames and how they have to correlate. So I saw that when I go into the market, I saw my 4 hour was selling. I saw my 1 hour was selling. I saw my 15 minutes was selling. I saw my 5 minutes was even selling. I knew that, okay, this is an opportunity for me to get into the market. I go into the market and then I made some money doing that. I sold at this level and then I took profit at this level. And that was the trade that we made for today. So I hope this explains a little bit of what the continuation is. I mean, the indication is. As I'm looking at this market right now, I'm seeing another indication as well. I'm seeing another indication as well. This is an indication because this was the low that was made. And a new indication is being formed right now. And it's currently being corrected on the 4 hour, right? On the 1 hour. So this is a correction happening right now. So if I go into the 15 minutes, I'm going to see that, okay, that was an indication, right? But a correction is happening right now. I'm going to pay attention to see what this one gives me. And if it gives me all the confluences I'm looking for, I may enter for a second sales. But yeah, I just wanted to share this with you guys, and I'll see you guys another time. I hope you enjoyed this video. Thanks.